The systems that run these booking engines that create price fluctuations that you think are random acts of buying and selling pressure, they're starting from a lower time frame, working their way up to a higher time frame. Then they cycle down from that higher time frame back down to the lower time frame. They're doing this all day long, all night long. That's what's going on. It's a price delivery continuum that starts from the lower time frames, moves up to the higher time frames, and once it fulfills the higher time frame, then it starts dropping back down into lower time frames. And it's not just time frames that you see me point to. So there is a volume imbalance in here because the bodies are not overlapping that gap between the two bodies here. So the close of this candle and the open of that candle, it's lacking a candlestick body. What does that mean? It means that that range that I'm highlighting here can be revisited. So what is it needing here? And if we open down here on a Monday of non-farm payroll week in a market that's highly destabilized because of all the geopolitical things and war savoring going on, there's no economic reason to own stocks. There's no fundamental reason to be long stocks. So if it's an inefficiency like this where there's no bodies, we can anticipate the market wanting to reprice up into that. Even if it goes higher, it doesn't matter. That gives you an opportunity to do what? Sell short here and reach for the liquidity that was used prior to the run up. But if it's bearish, this is a wonderful area to see price draw up into, thinking what? We created a low, we created a bottom, because the stock market by itself is predisposed to go where? Up. It's ingrained in everybody's mind to buy stock, be a holder. So that premise is constantly primed in the thought processes of traders. So if we open up here, it gives you the inclination that, we gapped up higher from where we closed on Friday. We traded down a little bit. Okay, wonderful. And then sent it up to a level that is predetermined, that these exist. I taught it to you. It's there. But the logic was it's going to offer a revisiting of this area because there's no body. Now, there still isn't a body. It's just a wick went there today. And volume imbalances, we know that it's likely to go through them. That's one of the PD arrays that you have to have a lot of flexibility. And they can also be used multiple times until, this is for your notes for the folks that aren't writing anything down, once there's a body laid over top of the close, the open here, whether it be an up close or a down close, once the body is laid across that, I'm not going to refer back to that volume imbalance ever again. That's not to say that you can't use it again. I'm saying that I won't use it. That means it's expired at that point. You see how even on the 4-hour chart we have that, but look, was that a candlestick body? Nope. But on the 4-hour, what do we have here? Did it close over top of that with a body? Nope. It still has this portion here. So this is still in play. It can be utilized again. It's not expired. 60-minute chart, same thing. If we go into a time frame, hourly, 4-hour, or daily, and a body is laid over top of it, why am I using these time frames? Why not any other time frame lower than it? Because 1 hour, 4-hour, and daily are my swing trading time frames, and I don't want to use a daily volume imbalance and cancel it with something less than an hourly chart. And even on the 15-minute time frame, it didn't quite close it in with the body. And what's resting right here? See that? What is that? We've been talking about it all morning, right? What's that PD array called? Volume imbalance. We have a fair value gap between this candle's low and this candle's high, but we have a volume imbalance. So your entire range shaded there should be this. That's how you should have it on your chart, because you can't ignore a volume imbalance if it's part of, or what would be part of, a fair value gap. So if there ever is a separation between two candles that would otherwise be like this would be a normal fair value gap, right? You would expect that. But I taught you that you have to use the volume imbalance in concert with that fair value gap, because that's the range they're going to use. Because if you don't do that, you won't have the real consequent encroachment. You won't have the real halfway point. You won't have the real upper and lower quadrant levels. See the importance of that?